Here's a question that stumps most people. You're standing in a store, and the cashier says, "Would you like to save $500 this year by paying me $95 right now?" Most of us would say, "Wait, that makes no sense. How does paying you money save me money?" But that's exactly how credit card rewards work, and most people get the math completely wrong. In the next 12 minutes, you'll learn the exact formula to calculate whether any rewards credit card is ripping you off or actually putting cash in your pocket. No fluff, no hype, just the break-even math that tells you if you're winning or losing. And I'll give you a 7-step checklist you can use this week to run the numbers on any card you're considering. Let me tell you about my friend Sarah. She's a registered nurse, makes good money, travels twice a year for work conferences. A credit card company sent her a mailer for a premium travel card. $450 annual fee. She almost threw it away because, in her words, "Why would I pay someone to use their credit card?" But then she did the math. Her hospital spending, her groceries, her gas, her travel bookings. Turns out, between the points she'd earn and the $300 travel credit the card offered, she'd clear about $650 profit in year one. She's been using that card for 3 years now, and it's saved her enough for a free vacation. The difference between Sarah and most people? She did the math before signing up. So why does this matter right now, in late 2025? Credit card companies are in an arms race. They're offering bigger sign-up bonuses, better perks, and higher rewards rates than we've seen in years. But they're also raising annual fees to match. According to reporting from the Motley Fool in 2025, premium cards are worth it again, even with high fees, but only if you know how to extract the value. The problem is, most people don't calculate their break-even point. They either avoid fee cards entirely and leave money on the table, or they sign up for cards they'll never use enough to justify the cost. Let's start with what we're actually talking about. A rewards credit card points program is a system where you earn points, miles, or cash back every time you swipe your card, and in exchange, you might pay an annual fee to have that card. The goal is simple. Make sure the value you get from points plus perks exceeds the fee you pay. That's it. That's the whole game. Here are the 5 essentials you need to know. First, you earn points for every dollar you spend, usually 1 to 5 points per dollar depending on the category. Second, those points have a real dollar value when you redeem them, typically between 1 cent and 1.7 cents per point according to valuations from 1 mile at a time. Third, many cards charge an annual fee, ranging from $0 for basic cards up to $550 or more for premium travel cards. Fourth, cards often include extra perks like travel credits, airport lounge access, or hotel upgrade certificates that add real value if you use them. And fifth, the break-even calculation is this. The value of your points earned, plus the value of perks you'll actually use, must be greater than or equal to the annual fee. If that equation works, the card pays for itself. If it doesn't, you're losing money. Now let's walk through how this actually works, step by step, so you can do this calculation yourself. First, find out the card's annual fee. It's usually listed right on the application or the card's website. Let's say it's $95. Second, check the rewards rate. Most cards give you 1 point per dollar on regular purchases, but 2 points or more on bonus categories like dining, travel, or groceries. For our example, let's say you get 2 points per dollar across the board. Third, estimate your annual spending on the card. Pull up your bank statements and add up what you spend on groceries, gas, bills, travel, whatever you'd put on this card. Let's say you spend $20,000 a year. Fourth, calculate your points earned. That's your spending times the rewards rate. $20,000 times 2 points per dollar equals 40,000 points earned. Fifth, figure out what those points are worth. If each point is worth 1.2 cents, that's 40,000 times 0.012, which equals $480. Sixth, add in any perks you'll realistically use. If the card gives a $100 travel credit and you fly once a year, that's $100 of value. So your total value is $480 plus $100, which is $580. Seventh, subtract the annual fee. $580 minus $95 equals $485 net benefit. You just made $485 by paying $95. That's the break-even calculation. Here's how people actually use this to build wealth. Strategy 1. Maximize everyday spending on the card. If you're going to buy groceries anyway, buy them with the card that gives you 3 points per dollar on groceries. Pay off the card in full every month so you never pay interest, and you're essentially getting a 3% discount on food. According to Upgraded Points 2025 guide, this is the foundation move. Strategy 2. Chase the sign-up bonus. Many cards offer 50,000 to 100,000 bonus points if you spend a certain amount in the first 3 months. If you're about to make a big purchase anyway, like new appliances or a work trip, time it with a new card application. That bonus alone can be worth $500 to $1,000 in travel value. Strategy 3. Use every perk aggressively. If your card gives you a $200 travel credit, book a flight every year and apply it. If you get lounge access worth $300 a year, use it every time you fly. These perks are prepaid benefits. If you don't use them, you're literally throwing away money. Strategy 4. Redeem smartly. Points are worth more when you transfer them to airline or hotel partners rather than cashing them out. A point might be worth half a cent as cash back but 1.5 cents when used for a business class flight. According to Lending Tree's analysis from April 2025, redemption strategy is where most people lose value. And strategy 5. Review annually. Your spending habits change. Maybe you traveled a lot in year 1 but not in year 2. At the end of each year, run the break-even calculation again. If the card stops making sense, downgrade to a no-fee version or cancel it. So who is this best for? This works best for people in a few profiles. First, you need to spend at least $10,000 to $15,000 a year on credit cards to make most fee cards worthwhile. If you're only spending $5,000 a year, the math probably doesn't work unless there's a massive sign-up bonus. Second, you need medium to high income because you're likely spending more and can take advantage of premium perks like travel credits and lounge access. Third, you need at least a 1-year time horizon because many benefits and bonuses are annual. Fourth, you need low risk tolerance for messing up, meaning you must pay your balance in full every month. If you carry a balance even once, the interest charges wipe out all your rewards. And fifth, tax bracket doesn't matter much here because in the US, credit card rewards are generally treated as discounts or rebates, not taxable income, according to NerdWallet. Let's do the math with real numbers so you can see this in action. Base case. You have a card with a $95 annual fee. It gives you 2 points per dollar on all purchases. You spend $20,000 a year on the card. Each point is worth 1.2 cents when you redeem for travel. The card also gives you a $100 annual travel credit. Here's the calculation. Points earned. 2 times 20,000 equals 40,000 points. Points value. 40,000 times 0.012 equals $480. Total value. $480 plus $100 credit equals $580. Net benefit. 580 minus 95 equals $485 profit. You're clearly ahead. Now the risk case. Same card, same $95 fee. But you only spend $8,000 a year because your spending is lower than you thought. The card only gives 1 point per dollar on most purchases because you're not hitting the bonus categories. And you redeem poorly, so your points are only worth 0.8 of a cent each. Plus, you don't travel, so you never use the $100 travel credit. Here's what happens. Points earned. 1 times 8,000 equals 8,000 points. Points value. 8,000 times 0.008 equals $64. Total value. $64 plus 0 for unused perks equals $64. Net benefit. 64 minus 95 equals negative $31. You just lost $31 by having this card. It's not worth it. Sensitivity check. Let's see what happens if we change just one variable in that risk case. If you increase spending from $8,000 to $12,000, keeping everything else the same, 12,000 times 1 point per dollar equals 12,000 points. 12,000 times 0.008 equals $96. 96 minus 95 equals $1 net. You just barely break even. Or, if you keep spending at 8,000 but improve your redemption value from 0.8 of a cent to 1.2 cents per point. 8,000 times 0.012 equals $96. 96 minus 95 equals $1. Again, barely break even. This shows how sensitive the calculation is. Small changes in spending or redemption strategy flip you from losing money to breaking even. Now let's talk about when to avoid these cards and the biggest pitfalls. First, if you don't spend enough, you can't earn enough points to cover the fee. If you only spend $500 a month on a card, most annual fee cards won't pay off. Second, if you redeem points in low-value ways, like cashing out at half a cent per point instead of transferring to travel partners at 1.5 cents per point, you cut your value by 2/3. Third, if you carry a balance and pay interest, that interest will almost certainly exceed your rewards. A typical credit card charges 18 to 25% interest. If you carry even a small balance, you're paying far more in interest than you're earning in rewards. Always pay in full. Fourth, if you forget to use the perks, you lose value. A free airport lounge pass is worthless if you never travel. A travel credit is worthless if you don't book travel. Fifth, annual fees can increase. A card that costs $95 in year 1 might jump to $125 in year 2. Always check before renewing. And sixth, watch out for churning too many cards. Opening and closing cards constantly can hurt your credit score and make it harder to track what you're earning. Stick to 1 or 2 cards you actually use. Let's talk taxes and costs with simple rules of thumb. The annual fee is the obvious cost. It's the price of admission. But there are hidden costs too. If you miss using a credit, like a $200 travel credit, that's $200 you paid for but didn't get. Redemption restrictions can also cost you. Some programs have blackout dates or require way more points for the same flight. On average, points are worth about 1 to 1.7 cents each according to valuations from Upgraded Points and 1 mile at a time, but that's only if you redeem wisely. In the US, most credit card rewards are not taxable. They're treated as discounts or rebates. However, if you get a sign-up bonus that doesn't require any spending, that might be taxable, so check with a tax professional. Here's a good rule of thumb. If your points and perks are worth at least twice the annual fee, you're in good shape. If you're barely breaking even, it's probably not worth the hassle. Alright, you want to actually do this? Here's your 7-step checklist you can start this week. Step 1. Pull your credit card statements for the last 3 months and calculate your average monthly spending. Multiply by 12 to get annual spending. Step 2. List the categories where you spend the most, like groceries, dining, travel, gas, or online shopping. Step 3. Search for credit cards that offer high rewards rates in your top spending categories and check their annual fees. Nerd Wallet and the Points Guy publish updated lists every month. Step 4. For each card you're considering, calculate your estimated points earned. That's your annual spending times the rewards rate for each category. Step 5. Estimate what those points are worth. Use 1 cent per point as a conservative baseline, or 1.2 to 1.5 cents if you plan to redeem for travel. Step 6. Add up any perks you will realistically use, like travel credits, lounge access, or statement credits. Only count perks you'll actually use. Step 7. Do the break-even math. Total value of points plus perks, minus annual fee, equals your net benefit. If it's positive and meaningful, say at least $100, apply for the card. If it's negative or tiny, skip it and look for a no-fee card instead. Now let's revisit that opening question with everything you know. Would you like to save $500 this year by paying me $95 right now? Now you understand. Yes, if you're going to spend $20,000 anyway and the rewards plus perks give you $580 of value. No, if you're only spending $8,000 and you'll only get $64 back. The card isn't magic, it's just math, and the math only works if your behavior, your spending, and your redemption strategy align with the card's structure. That's the insight most people miss. The card companies aren't giving you free money. They're betting you won't do the math, you'll carry a balance, or you'll forget to use the perks. When you do the math and use the card strategically, you flip the game in your favor. Quick FAQ. First question. Are credit card points taxable? Usually no. In the US, they're treated as discounts or rebates, not income. But if you get a bonus without spending, check with a tax pro. Second question. How much is a typical point worth? It varies a lot. Many programs estimate around 1 cent per point. Some travel redemptions get 1.5 to 1.7 cents. Third question. What is break-even spending? It's the amount you must spend, or the value you must extract, so that your rewards plus perks equal the annual fee. Fourth question. What if I don't use the perks like travel credits or lounge access? Then you lose that value. The fewer perks you use, the harder it is to break even. Fifth question. Should I carry a balance on the card to increase rewards? Absolutely not. Interest charges will almost certainly kill the rewards value. Always pay in full. Sixth question. Can I switch cards if my spending habits change? Yes. Review annually. If you aren't using the card enough, downgrade to a no-fee version or switch to a different card. Seventh question. Does a high annual fee always mean a better deal? No. It depends on how much value you personally get. A high fee only makes sense if you use the perks and earn many points. And eighth question. What if I rarely travel or shop online? Then a no-fee cashback card is probably better. Don't pay for perks you won't use. Before we wrap, quick disclaimer. This is educational content, not financial advice. I'm not a financial advisor. Everyone's situation is different. Your spending, your goals, your credit profile, all of that matters. Do your own research, run your own numbers, and if you're unsure, talk to a financial professional before making any decisions. All right. That's the break-even formula for credit card points. Do the math, use the perks, pay in full, and review every year. If you found this helpful, there's a link in the description to a free break-even calculator spreadsheet where you can plug in your own numbers. Thanks for watching, and I'll see you in the next one.